Welcome to ShortView Trading, to your morning market hit for Friday, 4th of June. What matters today and this coming week for traders? Well, what a wild ride it's been in global financial markets this week, or at least certain parts of them, in particular those meme stocks, the Reddit stocks that have focused so much of the media's attention over the past few trading sessions and indeed for much of 2021. This week it was the turn of AMC Entertainment Holdings, a cinema chain that has basically doubled in its share price over the course of Wednesday's trading session pretty much, and then gave back some of those gains yesterday. But as you can see from the chart in front of you now, these are truly extraordinary price moves and absolutely in no way related to fundamentals. That much is clear even without doing the analysis of the stock. What we have here is a real classic example of a bubble at work and too much cheap money pushing up and creating extraordinary price action and price movements in certain parts of the global financial market. Just look at the volume in the stock. In fact, if you look at the volume over the last 5, 6, 7 years, you'll see it really has taken off extraordinarily to the upside. The chart we're putting up in front of you now shows the extraordinary volume numbers that have been playing out in this stock. Let me give you some stats just to back that up. So for example, if you looked at the average trading volume of AMC in 2014, 15, 16, you'd see it was about 290,000 shares per day. In 2017, 18, 19, that picked up a bit to about 1.7 million as the greater interest picked up in this stock because of, I believe, takeover activity. And then you'll see that really as we get into this year, it's not 1.7 million or 290,000, it's 158 million average daily traded volume. And in fact, there have been a few days over the course of this week where average daily traded volume has been up at 700, 760 million, that sort of level. Now, of course, once you're trading that much, you're beginning to dominate the volume in the whole NYSE complex in total. So 760 million traded shares on the 2nd of June this week compares with something like about 4.5 billion in total across the whole NYSE on Tuesday this week. So you can see that this stock alone is accounting for 20% of the whole traded volume on the NYSE. And of course, that's just one of the meme stocks. There's plenty of volume in GameStop and others. So in that part of the markets, it's really been a wild run. But of course, across the rest of the market, in fact, in the S&P 500 itself, you'll see from this chart in front of you now, it's really been very quiet over the course of the last few trading sessions. As we teed up on Monday, S&P 500 sitting at the top end of its recent range, that range that's been in place since mid-April. And really it's sort of stayed around those levels for most of the trading session this week. But the key thing here is whilst volumes across most stocks in the S&P 500 have died and the NYSE volumes ex-AMC and ex the meme stocks have really been quite low, whilst that's been the case, the cracks are beginning to emerge. And in particular, those cracks are the sort of sudden pullback we saw yesterday in the S&P 500, the weakness we saw in the NASDAQ. It looks as though it's rolling over. And with that, you'll see our global momentum composite index, which we're putting up in front of you now. It's generated a sell signal earlier this week and looks as though it's starting to roll over and move lower, as we would expect equity markets to do as well. Partly driving those cracks, of course, has been a strong dollar that we saw yesterday. A sharp pickup in the dollar from oversold levels. The dollar's been oversold in the short term, so seeing that pickup there is quite intriguing. And of course, the flip side of that is euro weakness as we got dollar strength. But the key question is, how do we play it from here? And as I've expressed, in our view, we think momentum is rolling. Interestingly as well, with that, our key short-term market timing models very much retain a sell signal. You can see in front of you now the short-term risk appetite scoring system very much still on sell, as are other models. So with that in mind, the market looks vulnerable in our opinion. Short positions are the preferred choice at this juncture, and it'll be interesting to see whether or not today's non-farm payrolls out of the US creates any near-term volatility in those markets, and particularly perhaps some further movement in the US dollar. So for full details on how we're playing this, please see today's Daily Rag available to subscribers via the website. Equally, if you're interested in a free trial of the Daily Rag, please click on the link below and put in your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. Or if you like what you see, please subscribe. It's $50 a month, cancelable at any time with nothing further to pay. So what are we watching today? Well, I think clearly the key data point is the non-farm payrolls, 1:30 London time, to see how the employment market's playing out in the States, average hour earnings, and the unemployment rate, all the data that comes out that's associated with that is interesting. And I think what will be really interesting is the price action that surrounds it, particularly in the dollar and US 10-year bond yields. Elsewhere, there's a G7 finance ministers meeting, and there's a number of central bank governors speaking at this green conference hosted by the BIS, the Bank for International Settlements. So that's it from us. That's your morning market hit for Friday, 4th of June. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.